the rest of the questioning, but why don't you start? You talked about India and South Africa. We'll go around and talk about Pakistan from your perspective.
Great, thank you, Ovais, and thanks, Ali, for this wonderful opportunity. For everyone out here, my name is Srinidhii. I work with Speedinvest, which is a European-based VC fund. Quick background from me, and then I'll move on to Speedinvest, and I'll try to keep it under 2. So yeah, I was born and brought up in Oman. I grew up all my life there. Moved to India for my undergrad and eventually stayed back there for a couple of years working for an Indian VC. I was employee number 9, if I'm not wrong. We were a bunch of 20-year-olds not really knowing what we were doing in a VC. Eventually saw that boom happen between 2019 and 2021, where it was essentially a fund of about $60 million, suddenly grew to about $320 million, and we were essentially grappling with, okay, what are we going to do with that, and how do we essentially catalyze that for that ecosystem. Over a period of time, I also moved to London, and I'm currently working with Speedinvest. I was, while doing my master's, I also interned with First Circle Capital, which was an Africa-focused fund. So I'm all things emerging markets as of now. In all honesty, I am the newbie to the Pakistani ecosystem. But Speedinvest is not new to it. They've done 2 investments up until now, Abi being one of them, and Maqsad being the other, Abi the fintech, and Maqsad the tech company as well. The thesis here for Speedinvest is that over the last couple of years, they've seen a lot of winners emerge in the US and Europe for that matter, in terms of both fintech and other specific verticals that Speedinvest follows. But what we have seen is that some of those models, while they can sort of move on to be replicated in markets like India or Pakistan, Bangladesh, and so on and so forth, there is a lot of granularity that comes into investing in local markets, and like you rightly said, unless you really know the market, do not invest in that. I think Speedinvest consciously did that with a couple of targeted investments across countries. India, Bank Open was one of them. Indonesia, there was Lumo or Bukukas, if they were earlier, and a couple of others in Brazil, Middle East, and so on and so forth. The thesis for Pakistan specifically sort of arose in conjunction with the thesis in the Middle East, where we sort of started seeing parallels that were happening across these emerging markets, specifically to India, Indonesia, Africa, and so on, where the demographics are pretty starkly similar. Although a lot of other macroeconomic conditions sort of go into developing that thesis, this is something that started looking extremely interesting, and that's essentially how we started looking at it in a lot more serious fashion.
Great. Suneel?
Hi, my name is Suneel Gokhale. I'm one of the founders and general partners at a firm called VentureSouq, which is based in Dubai. I'm Canadian, born and raised. I've been living in Dubai for about 11 years now. Wow, time flies. In terms of our firm, our evolution is a bit janky, I guess. When we started investing in 2015, 2016, we were primarily investing outside the region. Our investors or LPs at the time, there was no ecosystem in MENA. The stuff that's happening now in the UAE and Saudi and Egypt and every other market in between just wasn't there. And our investor base was primarily interested in the hot deals in Silicon Valley or LATAM or India or Africa. So we made a number of very small early stage investments in those markets. And then around 2019, 2020, we started thinking about our own backyard. You think about MENA, you add it all up, it's roughly 300-400 million people. That's not even including Pakistan, which is, we'll talk about that. I'll talk about that a little bit as well. But we started concentrating on our own backyard, specifically on fintech, because we were looking at foundational layers of kind of ecosystem development and kind of just the development of geographies, period. And so fintech is something we focused on. We had the benefit of making a number of global fintech investments prior to kind of thinking about the region. And so we used a lot of those investments, good ones and bad ones, to kind of start forming a thesis and using those data points to think about what the evolution of fintech would start to look like in MENA, from kind of that move from analog to digital. And then of course COVID hit, everything went digital very, very quickly through the course of 2020. And so we launched our first fintech fund really in kind of 2021, which was focused on the region. And that was, the intent originally had been focused on kind of core MENA markets, which were, for us, were UAE, Saudi, Egypt. We did a little bit in kind of Maghreb Africa in terms of kind of Tunisia, Algeria, Morocco. and again, a few spots in between. But then in parallel, we were thinking about using, I think to the point made earlier, about demographic similarities between some of the markets that we had invested in already and Pakistan. And so, as the Indian origin guy that's making investments in Pakistan is pretty funny to some people, but we ended up kind of looking at Pakistan very, very closely, and made some investments in Pakistan out of our first fund. And I get the question all the time about, oh, how is everything going given obviously the macro situation in Pakistan now? And I'm like, knock on wood, we backed some great founders, some of which are here, and so we're quite happy with kind of our portfolio in Pakistan right now. And out of our second fund, which we're currently raising for, we absolutely plan on continuing to invest there. We're not taking the foot off the gas in terms of investing in Pakistan, just like we're not taking the foot off the gas investing in other markets that are going through a period of instability right now, like Egypt, and kind of other markets. So that's us.
Fantastic.
Hey everyone, I'm Archana from the Bill and Melinda Gates Foundation based in London. I know we have a couple of co-investors in the room. I'm the head of South Asia for the Gates Strategic Investment Fund, essentially our corporate venture arm, where we've always been in stealth mode, as I tell my team. We're very media shy, not many people know we exist. I didn't know we existed. I've been in the foundation for a decade. It's only kind of halfway through that I met folks in our investment team who said, hey, if you understand India well, you've been working on some of our program strategies there, can you help us figure out our venture presence outside the US and EU, which is kind of when I started working with the team from London in 2017 to build our India investments presence, and then expanded that more broadly into EU, and worked closely with Lynn Eisenhardt from the Gates Foundation on our one-load investment in Pakistan, which was our first. And then I stepped back to kind of go to the Bay Area and understand how Silicon Valley does investing, so spent a year there and decided to come back to lead South Asia investments. We're strategic investors, so we're a quirky animal in that sense. We're quite picky. We're not a DFI. We're also not a traditional VC. We're also not a traditional impact investing shop. We're strategic in that we invest in private sector innovations that are solving problems that the Gates Foundation programs focus on. And so that means we kind of operate like Google Ventures invests for Google, or Amazon Ventures invests for Amazon. Sector focuses for us have been kind of health tech, fintech, women's innovation, agri-tech, etc. We have a long history of engaging in Pakistan as an organization, starting with the polio program and expanding into kind of family health and now financial services as well. A lot of, I've been super interested and excited to engage in Pakistan, which is what led to our investment in OneLoad. I think that all of the signals and the demographics, like you alluded to, are all strong, and I think positive signals that we see in similar markets. I think just the rising kind of young population, just more appetite for tech innovation, more demand for innovation, a blooming tech ecosystem. All of those are strong signals that we see, and has a lot of parallels to other markets we invest in. We think there's a lot of potential for growth and impact there. Understandably, there are challenges, but there are challenges across globally as well, India included. And so I think it's just been a really exciting space. We've not done too much there, but really hoping to do more in the coming years.
Fantastic. We'll get to Suneel in a second, Kirill, because I've got a question for you as well.
Hello everyone, and first of all, huge kudos to Ali and the organizing committee. I have no idea, if Ali sleeps at all, but, he's like anytime during the 24/7 he would reply or share some information. It's amazing.
Or delete.
Yeah, this is my third Paklaunch, and I'm super impressed with the crowd and with the vibes. And it's just again amazing how ecosystem is being built right in front of our eyes and in front of us. So my name is Kirill. I'm running Conjunction Capital, which is a spin-off of RTP Global. RTP Global is a big fund. Fund 4 was recently announced. It's like 1 billion. Consists of the major fund, 660 million plus opportunity fund for the remaining amount. Fund 3 was 650 million. I was part of Fund 2 and Fund 3 and was an on-the-ground partner for India. Lived in India more than in 6 years, 3 years in Delhi, 3 years in Bangalore. Have seen huge transformation of India, and I think I have seen, a couple of cycles even during this period. And in early 2022, when we decided to launch a separate fund for frontier markets, I moved to Dubai and started this fund, which is 50 million fund, Middle East, Africa, Pakistan, Bangladesh, seed to Series A. We have, as I speak, we have 7 portfolio companies, 5 in Pakistan, 1 in Egypt, 1 in UAE. I'm closing the first deal in Bangladesh next week, maybe 7-10 days. So this is we started pretty early, and the pace for deployment was pretty fast. So like first 5 investments we did in the first 6 months. So it was like pretty fast deployment. I do believe that Pakistan suggests enormous opportunity. At the same time, we all know how tough the situation is now. I have kind of a personal kind of concern for my portfolio because it's like very skewed towards the country, Pakistan, which is Pakistan. If not this over concentration of one country for a relatively global fund, I would be deploying more. But now I'm kind of trying to build a more balanced portfolio between the frontier markets.
Fantastic, thank you. Question for Samir was, and Samir will do an intro, but if you can, give a little bit of historic context, because obviously Pakistan, venture capital started in 2018 or whatever it was, not quite insofar as there are so many success stories in the last 20 years of software and enterprise solution players building enormous success into markets like the US and so on. So if you can, give a little bit of a context over some of the great stories that you've seen, been part of, heard in the last 20 years, and then that gives a bit of context to VC as part of a path.
Yeah, this is why we should prepare for these panels, because I'm woefully inadequately prepared for that context. Listen, my experience, I guess the reason for being on the panel is SparkLabs, where I'm a general partner, is a Asia-focused early stage venture capital investor, mostly in Korea, Greater China. By that I mean Taiwan, mainland China, Hong Kong, and Australia. We have about 500 tech investments. We started in Pakistan 4 years ago, largely because I was home with COVID, and I couldn't go anywhere. And I met all these great entrepreneurs, met many of you, and we said, we think there's something here. So we raised a dedicated Pakistan fund. We run it out of Hong Kong for historic reasons. We made 3 investments in Pakistan. One of the founders is here, actually was here last night. Is Shamoon still here? Anyway, so he's here somewhere. We made 3 investments through the Pakistan fund, and 2 more which we haven't announced yet. One in the mobility space and one in the energy space. The lesson we learned in the downturn, the lesson we have learned in the downturn is to go bigger, to go later in the cycle, and to have much more concentrated bets. So the first 3 investments we made, I think each check size was, I forget, maybe 200, 250,000, maybe $500,000. The next 2 investments we haven't yet announced are individually, the check sizes from us are $5 million, the rounds are $10 million or $15 million, because we just think that there are entrepreneurs who are phenomenal and businesses that are fundamentally sound for all the reasons you would think they're sound. But the entrepreneur is spending way too much time raising capital and at events like this when they should be home building. So we decided to focus to have even much more concentrated portfolio. And at the same time, we have a Saudi Arabia fund, which is about a $75 million, actually it's exactly $75 million fund. And some of the entrepreneurs there are some of the applications we're getting for that are Pakistani entrepreneurs. And I agree with Dave on this one. If you couldn't succeed in your home market, you can't succeed in any other market. So there's only when you have massive scale in your home market should you even think about any other market. And Saudi Arabia, there's a lot of that. Everyone thinks Saudi Arabia, they're handing out money to anyone off the plane. While that may have been true for certain funds, our Saudi Arabia fund hasn't made a single investment yet. We've been around for 6 months. We're in no rush to write a check. Back to focus on Pakistan, back to Pakistan, like I said, we had 3 early stage investments, 2 much bigger investments, so the entrepreneur doesn't have to spend any time raising capital for the next couple of years. I'm also chairman of a private equity firm that's very much old economy. It's called Asian Pac. It's very much an old economy fund, very boring stuff. That's about a $3.5 billion fund where we do energy, logistics, and hopefully financial services. So I wish I knew more about the history of venture capital in Pakistan. All I know is my history.
Sure, no issue. So a couple of questions related to that. One is so there are 2 types of company you could invest in Pakistan. For example, there are those who are domestic TAM, where they're addressing the Pakistani opportunity by a relevant segment, what have you. And over time, they may be able to build an export model, but primarily they're focused on the local market. So if you were to take 2 lenses, which is, investing in a business that sees Pakistan as its core, or investing in a business that is an exporter. Okay, so for example, I was an investor in a company called Moderator in Turkey, which is a fashion marketplace, 90% export, actually 80+% export, brilliant. Turkish lira is tanking, you're doing dollar and euro revenues to Turkish and Muslim diaspora women in England, Germany, France, and the United States. You can't lose, because you get tons of trade subsidy, you get tons of exit bank loans, and you get dollar currencies, and you pay your suppliers in 45 days. Bit of a winner. So the reality is, between domestic TAM in Pakistan, between export, and second point, B2B and B2C, because B2C, challenging consumer market, deep TAM, tons of opportunity, pretty difficult penetration opportunities, not easy customer acquisition, not simple. B2B, a lot of enterprise players have emerged in Pakistan, built brilliant export businesses, further to my question to Samir, been able to build penetration into the US enterprise industry, into corporate sector, into hotel groups, financial services and so on. India's done an enormous job at that, of building, export-based BPO type businesses. So 2 lenses, Pakistan domestic, Pakistan export, and B2B versus B2C. I don't know if anyone wants to pick up those and go around the table and give your observations.
Sure, I can. Sorry. So I guess in terms of domestic versus export, for us, we're primarily fintech investors. And so for us, localized solutions is kind of the name of the game. Yeah. And so for us, it's going to be mostly domestic driven. And we're looking for great founders in Pakistan and all the other markets that we invest in that are building local solutions. With that said, we're of course not adverse to companies starting to expand outside of Pakistan. And I've had numerous conversations with founders and other investors in the room. It's for some companies it's been a necessity, given what's happening with the currency and the macro situation. You do have a lot of companies that are going from Pakistan, to the UAE, and then Saudi eventually is at least the narrative. And so execution will be key there. But I think focusing on the localized economy and kind of the domestic market for us is kind of is a must. And in terms of B2C versus B2B, we do I think we're MENA investors, and so sometimes it's kind of a tale of 2 markets. You've got the high GDP per capita, low population centers like UAE, like UAE, Saudi in particular, and then you've got kind of the longer tail economies like Egypt, Pakistan, Morocco, Algeria, Tunisia, if you kind of add it all up. And so what we tend to see is more picks and shovels businesses in the smaller population markets for us. So not quite enterprise, but definitely B2B. And then with the higher population, you can't ignore B2C in terms of the countries that are 100 to 100 million people. So obviously Egypt and Pakistan, we'll see more consumer stuff there, but we tend to gravitate more towards B2B actually. We like kind of like unsexy businesses that nobody really knows about, that kind of, that just kind of continue to generate revenue, lower risk, etc. So that's for us at least.
Got it.
Yeah, I don't know if any of you read this article Amar Habib Khan and I wrote in Profit about a year and a half ago. We essentially talked about, if you didn't, you should. If you want it, I'll WhatsApp it to you. It's worth a read. It's really well written, even though I say it so myself. Also, essentially what the article said a year and a half ago was without infrastructure, the tech revolution won't happen. So we eat our own cooking. So we essentially just focus on big building block businesses in fintech, mobility, and energy, and so on. For example, and this came out of losing money and getting our asses kicked on higher value businesses that were high up on the stack, because the basic stack in Pakistan doesn't exist. For example, a Korean entrepreneur wanted to build a big data center business, and within 2 weeks he realized that you can't find reliable, cheap energy. So a lot of these, so we went through about a dozen of these experiences and said, let's go earlier in the stack. So it's obviously, by definition, it's going to be B2B, and it's core stack. So it's energy, it's basic fintech, and mobility, and so on. So for example, electrifying the transport network. So we think these are generational opportunities. Once the basic stack is built, that's it. There are huge monopoly. I don't know if legally I'm allowed to use the word monopoly, but you've got huge monopoly rents, and no one else can displace you. So the ultimate moat is the incredible amount of capital to own those basic building blocks. So we like those businesses a lot, but they don't lend themselves to classic early stage investing or writing $250,000 checks. So we still think there are venture returns possible, but some of those look like private equity. Some of them will be venture. So we think fundamentally that's the place that is a great use of time. We think, given the cycle and we were seeing market exit, this is the perfect time because things are better priced, talent is better priced, and you can actually go make some bold bets given what's happening in the market. And in about a year and a half, all this will dry up because it'll all be taken. So we couldn't be more excited about where Pakistan is right now. And it's a helpful contrast to spend time in Saudi Arabia. It's in a very, very different place. So while the demographics look very similar, that has nothing to do with why we're excited about Pakistan or about Saudi Arabia. So in summary, it's a great time to build fundamental building block businesses that we did not have the chance to do in Korea or in Australia or in Taiwan, but we do have a chance in Pakistan. And shame on us if we can't take advantage of that. And on top of that, many of you will build great businesses. Frankly, you have a bit more time to do it because unless the building blocks exist, you won't be successful. And it's fundamentally B2B.
Great. Any other observations?
I would add something on the foreign exchange arbitrage. I personally think that it should not be the key differentiator, just because it's not sustainable. It's very hard to predict. Should certain companies leverage the current situation? Definitely. But can you build a sustainable company just because the local currency is being devalued every single year? Probably not. So it's not sustainable. So it's being devalued now, but potentially when the situation stabilizes, you might lose this kind of competitive advantage. With regard to the other points, I'm totally agree with the previous speakers. We believe that in certain industries the infrastructure is not there yet. It's very nascent for Pakistan in terms of pretty much everything, even like the source for talent itself, source for talent being institutions or big companies that are not there yet or not there yet in a decent number of companies. The fintech infrastructure, if compared, for example, to India with the UPI, But it will come, and hopefully in the next 2-3 years, it will be more mature ecosystem, which would provide more opportunities.
Any other points on that?
Sure. I'd like to add in terms of the local TAM specifically. So Pakistan definitely boasts that huge TAM, right? When you think about consumers, it's a large growing economy, young population, all of that. But there are fundamental differences between the other emerging economies that might have been able to tap into that versus Pakistan. If you take the example of Egypt for that matter, their ability or propensity to consume those digital products might be a tad higher than in Pakistan, purely because of the fact that there isn't that much fragmentation of the market itself. Pakistan, on the other hand, has 17 different languages. Building out that consumer product with the same thing that could be modded up is actually quite hard. So you'd have to think about truly catering to that local market to be able to distribute that. And that, I guess, comes with the kind of infrastructure plays that are the building blocks, and then eventually start building out companies that cater to that consumer audience.
That's a really interesting point, because if you take India, similar thing of cultures, languages, provinces, etc., and having invested in Big Basket, and the same thing. Language doesn't work, marketing collateral doesn't work in one place in India versus another.
Yeah,
so you're absolutely correct. You can't, right?
Yeah, so at that point, so there are two things to consider there, right? So one, can those products be built across these diverse population? But the second thing also goes in terms of you need to reach that kind of critical mass to be able to consume those products in the first place. So in India, that sort of happened after a while. Sure, the digital revolution started early on, but that kind of consumption really kicked in only over the last couple of years, right? So that for Pakistan is, I think, a difficult challenge, but it should slowly bridge that gap over the years.
Absolutely. There's a whole conversation there, but in terms of due diligence, there were a couple of observations earlier in the earlier group around, the challenges of investing in Pakistan, and why there are local peculiarities, what you need to test for, some of the risk issues, which Zen was honest enough to admit are genuine issues. I mean, in poor societies where people don't earn enough, they may cut some corners to earn more money. That's pretty much a given. No disrespect whether it's Italy or Pakistan or Mexico. It's going to be the same phenomenon. Okay, so from a due diligence perspective, throwing the question around the table, how is due diligence in Pakistan distinctly different to doing, I'll take an extreme example, but doing a due diligence in a GCC business, where you generally won't do anything wrong because you won't see your family again. But in Pakistan, how do you get around the challenges of really getting underneath the skin of an opportunity?
Yeah, sure. Look, I think it was on the earlier panel. Someone maybe it was Faisal, that said, something around. It's generally the same. Like, we don't really map out a different diligence process for Pakistan because we're investors in other emerging markets where it's maybe not the exact same level of risk, if you want to call it that. But I think so. We're not solving for something different in Pakistan. I really think when you're thinking about due diligence, you're thinking about kind of, obviously there's the legal stuff, there's commercial diligence, but a lot of it has to do with spending time. The point was made earlier, spending a lot of time with founders when you're talking about like integrity issues. Obviously the legal, that kind of takes care of itself. You get, good counsel, local counsel to kind of go through everything. And when we go into new markets, we need to understand that anyway. So we'll tend to kind of spend a lot of time trying to figuring out the governance frameworks in different markets. And to be completely honest, and again, the point was made earlier, having all these fraud issues in the US, which is, the tier 1 VC market in the world, and you have tons of stuff that's coming out, and probably more stuff that's going to start coming out over the next 6 to 12 months. So I don't think we really solve for anything different. I think it's, I think the legal stuff takes care of itself if you understand the market, but I think you have to spend time with founders on the integrity, on the integrity issue, trying to, and for us that, we try to actually, and it's not necessarily a diligence, it's more like a founder diligence question, but it's kind of like we try to figure out, how has this particular person performed, not just in the last, don't tell me like what you did in the last 2 jobs, like we try to actually go back all the way and see like, what were you doing in high school? like what were you doing in your early years of university? Because for us, we're trying to diligence, and it's again, it's not a risk, it's not integrity, it's more, have you been a high performer your entire life? Because if you've done it for 10, 15 years, there's a good chance you're going to do it for another 10, 15, 20 years, not just kind of, oh yeah, you worked at Amazon 3 years ago. Okay, yeah, that's great, or that's awesome, but like we kind of want to see how far back that level of performance has gone. So, but to go back to the original, it was a bit of a tangent, but it's like we're not really thinking about it differently. We invest in Egypt, Africa, all these other markets, Morocco, Algeria, Tunisia. So it's the same. You're just looking for the same thing.
Yeah, just to move the question around, Samir, what's your view on DD in Pakistan versus any other market?
So we've obviously had experience with diligence of private equity investments and venture capital investments. So once again, not to get all philosophical, but you can't ultimately hedge against dishonesty, right? That will happen. It will change with temptation, and it is what it is. I'm not. All you can do is protect yourself with asking the right questions, going through the process, and having controls. I think every time we've skimped on controls for cost or whatever reason, it's come back to bite us. It's not about the person, or the person could have left an exemplar, could have been a moral exemplar his entire life or her entire life. But temptation changes people, or you take a shortcut when something, the chips are down. For example, right now we're in an investment which has gone through a difficult past, where the company took a lot of shortcuts, including financial fraud, moral fraud, criminal activity. So it's time to turn the page, but how do you turn the page when the company is full of people who were part of that fraud, right? So what you have to remember is not everyone was part of it, and that fundamentally they want to do the right thing. So on the financial side, it's easy. You take a big haircut, recap, and go, but you can't recap a person. So frankly, it's easier to when fraud happens, you all know how to respond to it. You guys have done a great job. But when we're living with the fraud, that's the hard part, is how do you how do you change the right people, send the right examples to live through that? So underneath that is a terrific company, terrific assets. But it doesn't help you if I say, oh, it's not easy. No shit, it's not easy. But it will happen. And living through that is the hard part. And I'll give you one example of what we lived through. On the venture capital side in Pakistan, we did live through an instance of financial fraud. Can't do much, right? Can't do much. All the checks we did in before, obviously, we still believe in those, but we still suffered a fraud by a founder. I don't know. It happens. Sam Bankman-Fried got away with it. That doesn't make me feel better. I personally lost about $200,000 in that investment, but it hurts, and you never want to do it again. It's a harder way to learn by having suffered through fraud. But this doesn't help you, but you can't completely hedge against it. It will happen. All you can do is put in controls so you catch it early. That's the one thing I've learned from this private equity investment. It will happen. It may not happen at the founder level, the board level, but it's happening 5 levels down in the warehouse or in the credit process. For example, in a credit downturn, you'll see more fraud than in credit boom time, because the person who is out there negotiating settlements with your bad debt, that person is tempted to commit fraud. So that person owes your company 100,000 rupees. And he sort of settles with the debtor for 10,000 rupees, he's probably asked for a bribe on top of that, specifically for the downturn. So all you can do is put in controls so you catch it really early and act on it.
Yeah. Anything you would like to?
Yeah, just maybe a couple of points. So first of all, due diligence as a procedure is like absolutely useful thing to have for both founders and the investors, and current investors and the new investors. This is a process at a certain point of time, by the way, right? I mean, for a pre-seed company or seed company, there's not much to due diligence other than just get to spend more time with the founding team and to do the reference checks and try to understand. But it's because essentially we're like investing in people, and trying to understand what kind of characters we are investing in. But at a certain point of time, like pre-Series A, Series A, there's certain numbers, certain procedures should be there, and due diligence is of utmost importance to the company, just because the company will start understanding, what kind of standards the company should, build, and what kind of internal procedures, internal controls, reporting, all of this has to be built. And this is a very, very educative kind of thing for founders and for their teams. Like, for example, in one case, in our portfolio company, the point of contact was always the CEO. Is it good? No, definitely it's not good, because CEO should be concentrating on building the business and would rather delegate due diligence to the next line managers. But unfortunately, because the company was like scaling up pretty fast, he was unable to kind of build a proper functions below him who can just take the whole process of due diligence. So this is a very very useful procedure, due diligence by itself. Another point I would like to make is the cap table. Somehow it is related to the diligence, because from my observations on frontier markets, the cap tables are very, very crowded, and what I can see is that there's some dilution of responsibility between the investors. So like many investors would rely on others, and would typically not necessarily like all of them, but some of them would rely on other investors, and would think that other investors would dip their kind of diligence, and because I trust in them, I would just join. Not necessarily it's a right approach, right? Obviously, there should be some judgment, like a personal judgment of any investor, and maybe if not a proper due diligence, then a confirmatory due diligence after the transaction.
Yeah, I mean, I got told flat out by a GCC sovereign recently, who shall of course remain nameless, if General Atlantic invest, we'll invest. Wow. I mean, that's like, I'll follow him because I don't care about the DD process, because I don't know how to do it. But if he's doing it, I'm hedged. It's beyond belief. I mean, it's the FTX phenomenon. If Sequoia investing, I'll just follow. And I would slightly differ in my perspective, and I'd veer closer towards the point Kirill is making and the point that Samir made. When you come from a private equity background, commercial due diligence and downside protection and financial and legal DD is a completely different level to venture capital. Now, it merits it because the deal ticket sizes are much bigger. We're talking about common experiences. Samir and I have had over $300, $400, $500 million investments, $1 billion, including debtors going in. I mean, you lose your job in the fund if you missed a single thing in a legal agreement, or there was a single cell error in an Excel spreadsheet. I mean, it's that level. And the thing is, in venture capital, once you can't go that way, because you don't have the time and the resources necessarily, your commercial DD doesn't stop when you've done the deal. That's the point. You don't just close the book on the commercial DD and go, got a couple of experts in, did the deal, and then we'll just go into autopilot on the board. I mean, commercial DD, in my experience, is an ongoing process, because it's a bit like a job interview. Until you've hired the person, you've got no idea what they're going to be like. Anybody who says, I've got 100% perfect mapping of a future employee, unless they're doing a very mechanical job, you know what, you don't understand anybody, including the person you marry, until you actually marry them. Fact, okay? So putting 2 million or 5 million or 100 million bucks behind somebody, you don't know how they behave until the capital goes in. I mean, I've seen people go 90 degrees on personality when the money comes in. The same person who's going, yeah, I'm available to do the DDQ at 11 p.m. and let's meet up, and then good luck getting the board meeting in the diary. Because suddenly I've got the money. I'm not running away with it, but I can be a bit more casual because I don't need to care quite as much. And the people you see who are fantastically high integrity, forget the financial integrity. Integrity is the board meeting goes in on time. Integrity is they return your phone call in 15 minutes. A busy person, I won't name names because it's the obvious people, they will call you back. There's a founder, okay, he runs Kareem, I've said it. I mean, he'll still call you back that night. He'll still reply to your WhatsApp when he's had his morning prayer on Friday morning, 6:45 a.m. He'll reply to your WhatsApp message. I mean, that's the point of integrity, not just financial, legal. Do you respond? Do you respect? And do you understand the other person's challenges? And I think investors have to do a good job as well. Most of the founders I know who don't understand investing, it's because the investors haven't done a great job to explain their challenges. The single biggest challenge of an investor is I have to raise money from other people. That means my fiduciary responsibility is enough to stop me sleeping at night, because I'm actually investing other people's money. So a lot of founders don't necessarily get that, and that means my pressures lead to the kind of questions I ask, and the kind of pressures and tension I have. Sorry, might as well jump in, yeah.
Well, I just think
Yes.
we talked a long time about due diligence, so I like to shift the discussion if I can, or at least ask a question. So, especially since this is an international investor panel, I'm an international investor myself, I wonder when you think about Pakistan relative to other markets, you know, when I'm with my investment committee now and we talk about Pakistan, sadly what we talk about a lot is politics and the macroeconomy. Now, I think anybody who's in this room obviously believes in Pakistan as a long-term story. We believe in the Pakistani consumer. We believe in the Pakistani local founders and diaspora founders returning. It's amazing. However, when we think about exits, I think that the macroeconomic and geopolitical situation matters a lot, because what we want is the big capital that's behind Dave to come in directly at good multiples. So what I would like to ask you all is, do you think we need a kind of sustained political stability in Pakistan to enable good exits to happen in the medium term, 3 to 5 years or longer? Because when I think about some of the other great emerging markets, like Indonesia, what you've had is a basket case which is transformed into what seems like a stable market now.
Good point.
I mean, just since we invest across multiple geographies, I'd say yes, you do need a stable environment. You do need a consistent focus on the innovation ecosystem, because some of those fundamental digital rails that need to be built for innovation to happen to be kind of spurred in any economy takes time. It's not going to happen in kind of one political term. So there does need to be continuity in that, in kind of building some of those fundamental public goods that innovators can then come and build on top of. India's a really good example of that. Kenya is an interesting example of that. I think other countries in sub-Saharan Africa are trying to emulate that now. So you do need that stability. I think that said, is that directly going to lead to big exits coming? I don't know. I mean, even in mature venture markets like India, exits aren't always easy. Exits until now have been kind of secondary exits, and not, there have been a lot of IPOs that have been pulled back. So I think the exit environment is still challenging all around. So I don't know if there's a one-to-one direct correlation, but I do think the overall kind of impetus to the innovation ecosystem does need fundamental rails and fundamental regulations, and regulation always kind of follows innovation. But you do need some intentional focus on that over a period of time to actually see meaningful change.
Excuse me, I'd like to rephrase that question. Let's assume that the instability is here to remain.
Great question, yeah.
If the instability is a permanent part of the picture, how do we then match private equity with that instability? Because expecting stability is a very easy story, but that's probably not going to happen. So if we were to assume that instability is a part of, and it has been for the last 40 years, I grew up there for heaven's sake. So if instability is part of the picture, does private equity as a proposition still work? And the reason I say that is because I'm based in Bahrain, and I work in the private equity space, and every GCC investor I speak to brings up the same point, just like the General said there, again and again, that there's not only a country risk, there is also a currency risk. You go in at a certain exchange rate, in 3 to 5 years, that rate is doubled against you. What do you do now? So if you guys could address that, I'd really be keen to hear it. Thank you.
Yeah, so we're private equity and venture capital investors in Pakistan. We don't expect stability. We don't expect volatility to ever end. Then There'll be years that it'll be less, more, but that's fundamentally Pakistan. If you're not comfortable with that, don't be in Pakistan. Right? You come visit, you can eat the food, you can go to Badshah Mosque, don't invest there. But that's what it is. The question really is, are you getting paid for that risk? Are you getting paid for that volatility? Right? We think we are on our private equity bets, our investments, and our venture capital investments. And I go back to, you actually described it a lot better than I did. There are these fundamental building blocks that don't exist in Pakistan. So no matter what happens on top of those, no matter what happens, if it's democracy or military or whatever happens, basic building blocks of bijli, electricity, water, gas, data, mobility, and you can name a few others. Those building blocks get even more valuable, it's not less valuable, because fewer people are investing in those because they're scared by the volatility. So what do you need to do to participate in that investment environment in this volatility? You've got to have a lot more patience. Once again, Dave's fortunate, and that his investment mandate allows him to do that. Most of us don't have that investment mandate. We've specifically carved something out where we can create a hybrid of private equity and venture capital and do more club deals and have less dedicated capital funds, so we can invest in those generational opportunities. So for example, once India's Adhar equivalent is built, it's done, right? It's done. There's no one else gets to do that. So, but if you get to do that in Pakistan, why would you not like mortgage everything else you own to go build and buy and build something like that? So anyway, long story short, volatility is here to stay. Instability is here to stay in Pakistan. But that, for us, that means those building blocks are even more valuable. And we want, in fact, in the last 2 years, we've put more money into Pakistan, and we are looking forward to spending all that money. So while in early stage VC, we've gone quiet because our mandate, our investors, our LPs have a different view than we do, but we've got separate capital vehicles where we wish they were bigger. And in fact, we're investing with people who are used to frontier markets, who are investing in Kazakhstan, Indonesia. So, for example, we did a few deals with these folks in Indonesia, and they want to go into Pakistan with us. So, while we're talking about lessons learned applied to Pakistan, we're going to the people who learned those lessons in Indonesia and Brazil and saying, let's go do something in Pakistan. And some of the investments, I think you guys have read about them, and some of you know about some of them. We think this is the time. Pakistan assets these assets will never ever be available again. And these assets will never be priced in this manner. So right now, either I'll be bankrupt and broke and never be able to raise any money ever again, and that's okay, that could happen. Or these will be the greatest infrastructure investments ever. So obviously we're betting on the latter, but that's just what it is, right? So you've got to have this fortitude that comes with it. But it is what it is, right? So once again, to summarize, I hope these are Chatham House rules, because I don't foresee any stability in Pakistan. If it's going to be deceptive, and it is what it is, right? Those are well above my pay grade, but we think there are platforms to be built. For example, the assets that many of you own or looking at, we think there's more to be gained out of those platforms. Just one quick example. I'm sorry, I'll talk less. We just bought a syndicate. We put together a syndicate to buy a media group in Pakistan. We haven't disclosed the price, but it's a reasonably priced asset. So, but we don't think all the attention is about the broadcast, the news and entertainment. We think that's a distraction. The real assets are the digital assets and the online assets, and a massively loyal customer base. Because in your house specifically, I'm thinking, there's probably about 12 screens. There's TV, there's phones, there's tablets, whatever. But in the lower economic segments of Pakistan, there's one screen, maybe 2 screens. And there's a monopoly on screen time, because if you can own that person's attention for half an hour, that's a unique asset. And then if you can get online relationships with them on TikTok or YouTube, that is a unique asset. So we think this is the time to build those assets, and those people's lives won't change. They won't suddenly go from one screen of 2 to 12. So those people will stay with one or two screens. So we think every asset we buy it should be a platform. Even K Electric, everyone knows we're the biggest shareholder, single shareholder of K Electric on our private equity side. It's something you've spent a substantial part of your life in. We think K Electric is not just about electricity. We think it's a platform to do a lot of other things with. And being able to own those platforms and convert them into productive platforms, this is the time. You've got maybe a 2 to 3 year window, and that's it. So I wish we had an even bigger fund. And the only way we're going to get capital is a lot of the existing funds are tapped out or nervous or scared. But the guys who made these plays in Kazakhstan, Russia, Brazil, Indonesia, they've seen this movie. They've seen this movie, and it turned out pretty well for all of them. So we're actually co-investing with those people into Pakistan, because the Pakistan investors are pulling back.
Fantastic. A couple of questions before we go. Atif, sorry, was first.
On the related topic, so my question is, there seems to be a lot of recency bias if you are talking about this volatility. Given long-term investors, why aren't you zooming out? Because if you look at the data from 1990 to 2022, if you take any 10-year period, the minimum Pakistan's GDP has grown in US dollars is 5% CAGR. That's the minimum. And 2/3 of those periods grown at 7% CAGR out any 10-year cycle. So if you look at 10 years short term, yes, you get through that cycle every 3 years. Long term demographics, so much talent, like what you're building actually, it is growing very, very fast. And that's continuing to happen. And by the way, those stats, that looks better than Brazil, which had a 38% decline over the last decade. It looks better than Nigeria, which was flat for a decade. It's even better than Indonesia, which had 2 periods of 10 years, 90 to 2000, and 2011 to 2021, which was 3.5% CAGR for a decade. And Pakistan minimum, so far, it's been 5%. So why not take the longer term view and actually place your bets based on that, rather than worry about what happened in the last 6 months?
I would actually echo with that. I think that is the lens that we should be taking. It's not a 3-year, 4-year kind of thing where we're creating we're investing in a digital company, we're going to get returns of 5x in a span of 2 to 3 years. That's not the thesis at all. I think specific to the lens that was taken earlier was coming from an exit standpoint as opposed to an initial investment standpoint. Right now, I think the reason all of us are here is that we still believe in the opportunity that exists. The fundamentals are very much there, and they sort of mirror the other emerging economies, like we rightly pointed out. I think I would echo with what you're saying, that we should be taking that macro lens, taking a step back and looking at the literal opportunity that there is. From an exit standpoint, to sort of link this to the previous conversation that we were having, we have actually seen quite a few M&As that have happened in the last year. I think 2022 was one of the largest number of exits that happened for Pakistan in terms of M&As. Even though it's coming at an earlier stage, I think that's great for the ecosystem as a whole, because it sort of reiterates to the rest of the ecosystem that this is resilient and this can still grow. So that's probably my take on that.
Fantastic. Mo?
I think just a comment to piggyback on the boring stuff, right? In terms of assets that we're building, like you mentioned Aadhaar, like Pakistan's digital identity is Nagra. It's been there for the last 10 years. It's a question of everybody has an identity, right? So from a policy standpoint, what does the government do to actually open it up so that innovation can happen? So that's one example. The other example is, which the Gates Foundation funds is Rust, right? The rails, which were, when you look at UPI and the innovation that happened on the backs of, once the rails were set up and then the likes of Paytms and all the others innovated, Rust has existed, right? So it's come about, but now there's this whole fintech revolution, or at least companies that are trying to build on the backs of the fact that the rails are already set up. So when we go back to the fundamental building blocks, they are getting built, right? I think the thing that we need is, and again, some of the stuff that we in this room can't influence is really the policy side, right? Where policy has to go hand in hand, which is where foundations and others that have influence can come in from the government side, influence. We get things like Rust set up, and then the ecosystem innovates on. So I'm fully in line with get the building blocks, get the boring stuff there, because then the ecosystem will innovate. And on the backs of Rust, we are there's a subset of companies that are, so it's happening.
Fantastic. Yeah.
Yeah.
Hi everyone, my name is Wais Rahim. I'm from Sturgeon Capital. I'm their venture partner from Bangladesh. My question was more on regional cooperation. In the last year or so, I've seen a lot of Pakistani startups make foray into Bangladesh. A lot of Bangladesh companies make foray into Pakistan, and demographically very similar. 250 million people, 170 million people, socioeconomically also very similar. As investors and with portfolio companies that you guys are working with, what are your thoughts on cooperation regionally, whether it's on the PE side, VC side, between Bangladesh and Pakistan?
Yeah, I think there's like a lot of scope for that. Rightly so, when two markets actually function quite similarly in terms of like the demographics or business models for that matter, right? So I would think of it as in two ways. One, in capital infusion and two, knowledge transfer. I think that becomes immensely important for the startup ecosystem as a whole, but especially so for early stage startups where you don't necessarily have to reinvent the wheel and you can learn from other models that have worked across. I think personally, back in the early times when we were doing competitor analysis for startups in India, the moment I would do something like that but based out of the US, it would make completely no sense, right? Like the market is very fundamentally different. I'm not going to be selling SaaS to an SMB in India even now. So if that is the case, what are my other comparable economies that I should probably look at where they have done that and successfully built that out? With Pakistan and Bangladesh, or Pakistan, Egypt, Pakistan and other parts of the Middle East, even India to some degree, that ability to transfer that knowledge does come. It comes either in the form of like diasporas who were essentially trying to build that out, things like this, but also in terms of like founders who are able to sort of nudge that in two different economies. So if one has been making those mistakes in one, the other is very aware of that similar demographics and they don't really have to make that mistake again, which can be pretty nice to have when you don't have adequate resources to make all those costly mistakes.
Fantastic. Maybe one more question.
Are there any lessons that you have picked up from your investments so far that other international investors or maybe even local investors can benefit from you sharing?
I can jump in and share a few. As an internal auditor, my head always goes to like, what will go wrong. I think a few things, just being an international investor based in London and investing in South Asia, which is not my preference, but it is how it is. I think one is always go to the field. This is like, I mean, you can do a number of Zoom calls and all of that, but I think to the earlier discussion we were having on diligence, it's super important to just go and physically and spend time with the team. I think that's also something founders should look for if your investors, if a potential investor is not coming down and actually spending time with you and your team, and it's not a fly-by visit, actually sitting down with your team and your extended senior management team, etc. That's something you should push for and ask for, because it's really important for you to get to know your investor as well and understand how they operate. I also think when you start investing in companies, especially when you're not co-located in the region, it's like if you marry someone, you're marrying the family, right? So you don't just get to know the CXOs and get to know the extended senior management group and kind of the -2 levels and the folks who are actually building the tech and understand kind of what drives what they're building and their motivations for the platform, what they want to solve for. Is that really aligned with the mission of the company? That's one. The second I would say is just governance is always something that should have happened yesterday, not next week. That's a learning we've had from investments. Sometimes we look at kind of Series B companies and think, oh, they're still early, they're still evolving, why layer them with governance? And sometimes, I mean, it's not about layering them or overburdening them. Sometimes the regulation demands it, especially in financial services or in healthcare. You do need to have a lot of things around consumer protection and just strong governance, risk compliance, all of that in place. And it's when you react to it when something has gone wrong, you're already too late. And so we've now, looking back, I think we place more focus on, hey, what governance measures can we put in early on to be more proactive and less kind of reactive when something's going bad. So I think that's the other one I would add. The final thing I would say is investors and companies get super excited about, hey, we want to take a company from Pakistan to Bangladesh, or like we want to experiment from India into Kenya or Nigeria. And the moment we say we're global investors, that's the coach they jump onto, which is like, can you take us to Africa? If you're trying to build a company everywhere, you build a company nowhere. And that's like a key lesson we've had. So now actively have a conversation with companies on, okay, we understand you have aspirations beyond this region, and if there's revenue potential and if the market's taking you there organically, that's great and that's fine, you should experiment, but you have to be strategic about it. And I think we try to spur experimental, demonstrations, pilots, innovations, but try to do it with non-dilutive capital, because you don't want to distract the core business of the platform. So I think thinking a bit more creatively as investors as well on how do you help these companies experiment, but don't take away from the core, net worth of the company in doing so, and make a few risky bets, but kind of on the side is something I would say.
Yeah, I mean, there's one point, if I may raise. I mean, I don't think I've seen a successful example in my own experience without the founder and the founding team being purpose-oriented. Okay, so it doesn't come up in DD because you can't test it. People can talk about it, but it's very hard to test the sincerity of genuine purpose. Okay, and if you look at the failure examples, the purpose is faked up, generally speaking. And sometimes, no disrespect intended, certain types of American founders are very good at telling the narrative story, and you look at some of the failures and they're now sitting in jail, and the reality is they're very good storytellers, okay? And the people who succeed in Pakistan and in the region have a genuine purpose orientation. If you take Kareem as an example, or you take Kitopi, or you take any of the Pakistani founders who achieve success, and I don't mean success by an exit, I mean success as in built a team, built an orientation of that team, and built a common set of values. I don't see many examples where the purpose orientation is missing, or the founder's not purpose driven. You've got to wake up every morning and go, I want to change something, I want to make a difference, I want to make a difference to Pakistan, I want to make a difference to the community I'm serving, so which follows on the Gates point. So the point is, I think purpose orientation is a key factor.
One more thing, just back to your question, which is, everyone says if you're going to fail fast. That's actually true. So I bet you have companies in your Pakistan portfolio that are zombie companies. That's not a good use of your time. It's not a good use of the entrepreneur's time. It's really not a good use of anyone's time. Just respawn. I know I've got a company in my portfolio in Pakistan. We've got a company in our portfolio in Pakistan, where the founders are phenomenal. It's just they've got this moral obligation to do something because they've got VC investors who believed in them. They're gonna be in a holding pattern. It's gonna be a zombie. It's gonna meander along. I don't know how it turns out. So my advice to them is just respawn, start again. And because the founders are fundamentally intuitive people. At the same time, the other side is if you're gonna scale, go grab the opportunity to scale big. And this was what led to us focusing on large checks, big investments in a company that didn't have the product market fit, because they just aren't being backed to the level they need. And this is a unique time that they can scale a lot faster. So the two things I've learned from what we've done in other markets is there's a unique moment, there's a kind of a tide in the affairs of men where you want either sense that it's over, just stop, just go home, start again. LPs are big boys and girls. If you're in VC and you haven't lost money, something's, I don't know, you just haven't been paying attention and you're not looking at your portfolio carefully. We're all big boys and girls, we'll move on. But that founder shouldn't spend the best years of their lives trying to keep a company alive that deserves to die. At the same time, if you have a company that just has nailed it, right? It's got product market fit and a need, a giant check so that they can just go scale. Just make it well known. So don't try to sprinkle a bit of water on everyone. Just that one company deserves to be much, much bigger. And we're looking for those companies. You've got them in your portfolio, call me, because we're looking for those guys.
Fantastic. Ali?
Yeah. I think just short on time, so I think
okay, fantastic. Great. Okay, so really appreciated everybody's time and expertise. I think important to recognize the knowledge, expertise, history in this room is incredible. Everybody here has got something to contribute. So wanted to thank everybody for listening, wanted to thank the panel for their fantastic insights, and look forward to doing more of this in the future. Thank you.